Hey there, fellow traders! Welcome back to Chart Challenger, your ultimate source for straightforward and powerful trading strategies. If you're new to the world of Forex and price action, you're in for a treat. Today, I'm going to break down a simple yet incredibly effective trading strategy that has the potential to achieve a win rate of up to 90%, provided you master the concepts and practice consistently. This strategy is built entirely on raw price action. No indicators, no confusing setups, just pure understanding of market structure. We're going to cover how to identify highs and lows, market structure basics, drawing and validating trend lines, confirming breakouts and identifying fakeouts, the pullback entry technique, plus key tips on risk management and execution. So, make sure you watch till the end because every single part plays a crucial role in making this strategy work. Part 1. Understanding highs and lows. Before you can master entries, exits, and trends, you need to understand the foundation of price action, highs and lows. In an uptrend, price creates higher highs and higher lows. That's a sign of strength and continuation. In a downtrend, price forms lower highs and lower lows. That tells us sellers are in control. You can identify these turning points on any time frame: 1 minute, 5 minute, 1 hour, daily. The structure remains consistent. If the price makes a new high and then pulls back but doesn't break below the last low, it's still an uptrend. If the price forms a new low and any bounce fails to break the previous high, the downtrend is intact. These swing points are your roadmap. Memorize them, draw them, respect them. Trendlines, the trader's compass. Now that you've got a solid grip on highs and lows, let's move on to trend lines. A trend line connects two or more significant swing highs or swing lows to give us a visual path of the market's direction. In an uptrend, we draw a line connecting two or more higher lows. This acts like a dynamic support level. In a downtrend, we connect two or more lower highs, giving us a dynamic resistance zone. The more touches the trend line has, the stronger and more reliable it becomes. This line isn't just a drawing, it's where traders expect price to react. But remember, trend lines can break. And when they do, that's where the fun begins. Trendline break plus market structure shift. So what happens when a trendline breaks? Let's say price has been forming higher highs and higher lows. You draw your ascending trend line, and one day, boom, price breaks below it. Is this a reversal? Maybe, but we need more confirmation. That confirmation comes when price also breaks the last significant higher low. This is a strong clue that buyers are losing control and sellers are stepping in. Similarly, in a downtrend, if the descending trend line is broken to the upside and the last lower high is also broken, the momentum may be shifting to bullish. The dual break of both the trend line and the key market structure level is your signal that something has changed. But wait, don't jump in yet. There's one more piece to complete the puzzle. Part 4. The power of the pullback. This is where most beginner traders either make money or lose it. The pullback is a temporary retracement in price. After a breakout has occurred, after breaking a trend line and key structure, a high or low, price often pulls back to retest the broken level. At this point, the previous resistance often becomes new support. If price rejects that level, meaning it bounces or shows clear signs of hesitation or reversal, such as a stall in momentum or repeated failure to push lower, That's your signal to consider entering a buy trade. Place your each stop loss below the pullback low and your take profit at the next key resistance or supply zone. For sell trades, it's the same concept. Trendline breaks down. Previous low is broken. Price pulls back to retest that old support, now resistance. If it fails to break higher and stalls, we enter short. Set your stop loss above the pullback high and your target at the next major support zone. Risk management, the real key to profitability. Even the best strategy in the world fails without proper risk management. Here are some non-negotiable rules. Never risk more than 1 to 2% of your account on a single trade. Always use a stop loss. No exceptions. Define your risk to reward ratio. Aim for a minimum of 1 to 1. This means your potential profit should at least equal your risk. Avoid overtrading. One good setup is better than 5 bad ones. If in doubt, stay out. Your goal isn't to win every trade. Your goal is to control your risk and let the probabilities play out over time. Timeframes, one strategy, multiple views. This strategy works on any time frame. Whether you're scalping the 1-minute chart or swing trading on the 4-hour, the logic remains the same. Identify the trend. Wait for the trendline break. Confirm with structure shift. Enter on the pullback. Personally, I prefer shorter time frames because I like quick results. But if you like a slower pace, try the 1-hour or daily. Test it. Journal your trades. Build your confidence. Final thoughts and homework. Let's recap. 1. Spot the trend using highs and lows. 2. Draw and validate your trend line. 3. Wait for the break and structure shift. 4. Confirm the pullback. 5. Manage risk like a pro. Your next step, open a demo account and practice this setup over and over again. Aim to master one setup, not 20. Let me know in the comments if you have any questions. I reply to every single one. And if this video helped you, give it a like, subscribe for more no BS trading lessons, and share it with someone who needs a better strategy. Thanks for watching. Stay patient, stay disciplined, and as always, challenge the chart. See you in the next one.